Thank you, Mark, and hello from London. We're once again well within the summer doldrums, and the lessening number of technical patterns is once more reflecting this. However, I suspect that this commentary may become one of the more important technical commentaries I will make this year. I'll explain shortly why I said that. Firstly, in the currencies, we had only 3 key reversals last week. Weekly key reversals last week. There was a weekly key reversal down in US dollar Malaysian ringgit. That is one to note for those of you who follow palm oil and vegetable oils in general. However, there has been no immediate follow-on lower in US dollar Malay ringgit. Indeed, the opposite seems to be developing. Meanwhile, we also had a weekly key reversal down in US dollar Hong Kong dollar. This was more a relief to the bullish dollar pressure we had seen here since mid-May, when the market had started slamming up into the top of the cap at 785. Last week was, as I said, a relief to that pressure rather than a change of direction, as we've subsequently seen this week. There's been no follow-on lower and a somewhat tendency to try higher, though not as far as that 785. Lastly, in the currencies, there was a weekly key reversal up in euro against the Swedish krona. Very much on its own, but very much working higher this week following, which is somewhat satisfying, especially as it is seemingly starting to counter last month's monthly key reversal down that has ridden the market lower for the first half of August. Looking at the commodities, well, there were only 2 that I follow, but it is these that I think may be why I suggested today's commentary is important and also ominous. Firstly, we had a weekly key reversal up in ICE Dutch TTF gas baseload futures last week. This came after the last 3 weeks had somewhat stabilized, if at a higher level, after late July's high, the 3rd highest high ever, and effectively the 2nd highest high if you count that huge spike in early March as 1 unit split over 2 days. This is ominous, as we are seeing such high prices at the wrong time of the year. Not at the peak seasonal demand over the colder northern hemisphere winter period, but in the height of summer. If this is the price at this time of year, what will it reach as the market moves through autumn and into winter? Already the crude oil equivalent price based on natural gas is in the hundreds of dollars a barrel. It is a further ominous portent for the future, as this week prices have moved even higher. At this time of speaking, the price is about 11% higher than last Friday's close, and they have been as much as 22% higher this week, made yesterday. So far it seems an orderly market, but with a monthly key reversal up here back in June, which I warned about at the time, and now a contributing weekly key reversal up, the indications for higher levels and all that means are ominous. The second commodity with a weekly key reversal up is related to the first. It is the EEX German power base month future. This likewise had a weekly key reversal up last week, piggybacking on the monthly key reversal up we saw in June, and it likewise has seen a significant move higher this week. At the time of speaking, it's about 12% higher, with a peak this week yesterday at about 20% higher since last Friday. Interestingly, this market gapped higher over this past weekend, a gap that is still open. Additionally, prices are approaching the true 2nd highest high made back in March, something that the Dutch gas future still has a little way to go to achieve. All these points make this power contract look the more concerning out of these two ominous looking contracts. I'd suggest a close eye be kept on both of these going forward. As always, I'm happy to share my videos, various charts, and answer any questions with anyone who wishes to contact me. With that, I'll finish this section from London. Hope you found these comments useful.